Welcome to the Veronica Edwards Show, where we have fun financial conversations that everyone listening can apply to their personal and professional life. I'm your host, Veronica Edwards, CPA, and we are back season 6, completely independent and sponsored by yours truly, Balance Virtually LLC, my accounting and consulting business. But you too could be a sponsor if you would like to be. So please, if you're interested in being a sponsor, a guest, or just a loyal listener, you can like and subscribe to this page or head over to balancevirtually.com or veronicaedwards.buzzsprout.com. So let's jump into today's show, one of my faves, CPA chat with friend and fellow CPA with over 20 years of experience, Miss Alanna Anthony, owner of Amplify Accounting and Consulting, to break down retirement plans and flexible spending plans for small business owners. So, Alanna, how are you? Welcome back.
I'm good. Thanks for having me. How are you doing?
I'm doing great. I see you're wearing your swag, friend.
Y'all need to get one of these. Get one of these.
Yes, I'm testing out all the different materials. I have a hoodie. Alanna is modeling a nice sweatshirt. Only, friends of the show have it right now, more to come. But if you guys are interested, like and subscribe, let us know. We can make it available. I actually have a girlfriend, Alanna, that helped me with this because she has a podcast and I was wearing her stuff. And I'm like, I like how your stuff feels and looks. And she goes, you know what, Veronica, this might be a business for me to help business owners because she
Yeah.
has it set up to where it's like on consignment. Like whenever I want to order it, it's available, it ships in a
Oh,
week, but I don't have to deal with all of, the logistics. I said,
look, you
I'm
might have
telling
to
you.
put me on because I need a couple shirts for
Yes.
my business.
Yes. Give me I'll talk to you later about just getting your logo and we will
Yes.
get that set up. So the last time you were here, Alanna, we were talking about the big, beautiful bill and we about broke but I would say broke the internet, broke the YouTube. We almost broke the internet, girl. It was some good
Good. I'm glad it
topics.
was helpful because a lot of
Yes.
people, it's a lot. I actually just explained to someone yesterday that with the tax code changing, it's a lot for just a person who doesn't work in the industry to keep up with. So just imagine like for us as people in the tax industry just trying to keep
Yes.
up with the changes. So I just wanted to make sure people knew like at least the basics of what's happening.
Yes. No, you covered great stuff because, afterwards I reached out to you. I was like, girl, people are saying it's this and it's that. And you was like, girl, this AI now, like
Yeah.
the bill is huge. So it was like kind of mixing old bills with new bills. And I said, I'm
Mhm.
riding with Alanna Anthony. If she says this is what the bill is, that's what it is. Cause I'm not reading that whole bill.
Yeah, I don't think anyone is, but for the parts that I felt like was important, I was like, "Okay, let me get in this bill,
Yeah.
understand what's happening because I know what's gonna help my clients, so hopefully it'll help other business owners out there, and
Yes.
individuals truly, because we have that piece too of the bill."
Oh, absolutely. And the timing is perfect. This show is going to air in December. It is Veterans Day today, actually, though, and we have a snow day in the mountains. It is brick. It is cold. It is in the 20s here, Elena. What about in Queens?
Oh, it is in the low 30s here. I just
Mm.
wanna say thank you for your service to all the vets. My daddy's a vet, and I have lots of
Yes.
uncles and family members who are vets, so shout out to all of y'all. But yeah, it's
Yes.
pretty cold here. We have a freeze warning. We're not too happy, especially coming off a 70-degree I think it was 70 on
Hmm.
Saturday.
Hmm.
So,
And I believe tomorrow it's going to be in the 60s.
see, I can't keep up.
Yes. And also with Veterans Day, we have to shout out executive producer of the show, Aaron Batan is a veteran. Shout out to
Shout
Aaron.
out
Thank you
to
very much.
Aaron.
Yes. So let's jump into today's show. What was birthed out of the big, beautiful bill, we started talking about tax saving and planning. And you talked about this flexible spending account. We're going to get to that later. But I definitely thought with the timing of this airing in December, this will be perfect time to talk about retirement planning.
Yeah.
So again, Elena, on these shows, I hand everything over to you, but I'm just gonna throw it up for you and just say, why is it so important? Because I know small business owners are thinking, yo, we got tariffs, everything is high, cash flow is tight. Why is it important to make room for retirement and health savings?
Well, first of all, because when you really think about it, do you actually plan to run your business for the rest of your life?
Nope.
Like, that's really one of those things you gotta think about. And so for a lot of business owners, because they're in the business day to day, sometimes they don't think about what will it look like when they retire. I mean, there are some
Mhm.
business owners who feel like, maybe there'll be legacy and they could pass it down to their kids and the business will still run and they'll get a piece of that. There's some business owners who feel like, okay, Imma sell off and Imma sell off big, and hopefully you do. But there may be some business owners who may sell off when they retire, but it may not be a situation where they get what they expect, just depending on the economy at the time and advancements, like we mentioned, AI. And so you want to set yourself up in a position where you are comfortable in retirement. And you
Mhm.
want to make sure, as a business owner, you don't get those typical benefits that you would get being an employee. So we also want to make sure that you have medical coverage and healthcare coverage so you're not taking such a large hit if anything unexpected was to happen.
Yes, and it's happening more and more. I know I've seen it since living in Asheville the last 9 years. We've had a pandemic, we've had a hurricane, we have ice, we have all these things happening on top of healthcare going up, food
Mhm.
prices going up. So, yeah, let's jump right into it. So, today Elena is going to break down for us retirement and flexible saving plans, and I just want to list those plans cuz I even had to look them up and be like, what does this stand for? We hear it and I was just making up some of the terms clearly in my mind. So the first one, I got some notes here, is self-employed 401k, also known as the solopreneur plan. Elena, I didn't realize this was just created in 2001. So
Yeah,
it's the baby.
it's a
It's the
baby.
baby of the curve.
It
So
is the baby.
yeah, so we're going to talk about self-employed 401k. Then we're going to talk about simplified employee pension, SIP, which I had that all wrong. Simplified employee pension, individual retirement arrangement, IRA. So a SIP IRA, and we're also going to talk about a Roth IRA, which I found out Roth was just named after the senator that came up with that. And Roth was 1997.
Mhm.
The SIP IRA is 1978, a little older, along with FSA that was created in 1978, the flexible savings account, and then the simple IRA savings incentive match plan for employers that was created in 1997 also. So we have those. So the self-employment 401k, the SIP IRA, the Roth IRA, the simple IRA, if I feel like I'm saying this over and over again, and the FSA.
Yeah.
Keep us straight, Elena, because I'm confused now. Start us off with the self-employed 401k.
Okay, so we're gonna call that one the solo 401k because it's just easier for people to understand it, and that catchphrase is just more recognizable across the board. But the solo 401k is really popular. We mentioned that it was the baby, but I think it's probably one of the most popular plans out right
It
now.
is.
Just because there are a lot of people who are solopreneurs or it's just them and their spouse. And so they don't necessarily have employees. And there really wasn't, they could do the SEP, but sometimes people just want to do something that is a little bit simpler for them. And so, as I mentioned, that solo 401k can be used for you as a solopreneur and a spouse only. Okay. And then you're
Mm.
allowed to make employer and employee contributions similar to a 401k plan at your if you was employed with an employer. But because you can do both sides, you're able to contribute up to 70,000 for 2025. Now,
Mm.
you have to open it up by December 31st typically. But because of the Secure 2.0 Act, people who are just completely sole proprietors, so sole proprietor only, you are
Mhm.
able to have until April 15th to open that up.
Ooh.
Yeah,
And
and make
when
a
you
contribution.
mentioned that a spouse can participate, do they have to be a contractor or an employee of
They
any
would be
form for the
considered
business?
employee of the business.
Okay.
Yes.
And then you also mentioned, ooh, there were so many good nuggets that we could potentially do this all the way until April the 15th.
Yes. And the thing about this is a tax deferred product, right? So that basically means when you get a tax deduction when you contribute. 401ks, I like to tell people, are dollar for dollar.
Oh.
Dollar for dollar. So
Meaning you can contribute 75. It's not like, "Oh, only 50% will help you." No, all of it
all
is
of it
gonna
will
help.
actually lower your taxable income completely. And
Mhm.
but the thing is, because it's tax deferred, once you retire and you start withdrawing the funds, those funds now become taxable at your current tax rate. So if you are a person who possibly like think you're going to be in a higher tax bracket later, as you're going through, make sure you're continually evaluating and seeing if that product is going to be continue working for you. And that's where kind of tax planning comes in to figure out like maybe I need to start moving this over into something that is after tax. But that's a little more advanced. So just put that in your pocket.
Right. And the only other question I have for that, that up to 70,000, is that per person? So me and my husband, so it could be 140, or it's 70 for that whole tax ID for that business?
Per person.
Hmm.
Yeah. So you
Okay,
and you
now.
also get to write it off as a business, but you know.
Right. That's why y'all need to call Amplify Accounting and Consulting. All right. So, okay. So I think I have that down. That's the solo
Mhm.
401k. All right. How about the SIP IRA?
So, okay, so I pronounce it SEP, but that's from
SIP.
my,
I think you're right. I
yeah,
think I
from
got
my
that. Yeah.
experience back in the whole financial world. But, okay, so a SEP is simpler to set up than kind of most of the plans out here. What you are allowed to do with a SEP is you're allowed to either contribute 25% of your profit for the year or up to 70,000, I would say. So you can't go over. So even if your business, I probably should have did the math, but let's just make up something. Oh yeah, this will be
Mhm.
perfect. If your business made like 600,000 for the year, you cannot contribute like 100,000.
Right.
Okay, so you have to only contribute up to the 70,000. Now, it does work for people who have some employees, a very small number though. You don't want it to be like you have a lot of employees. There's another plan that's available for that. But the thing about if you do have employees, you have to contribute exactly the same amount to your employees that you contribute for yourself. So
Mm.
that's something to consider. Like, so if you decide I'm going to contribute 25% for myself, you got to contribute 25% for your employees.
So that's where it's different from like a traditional 401k, where a lot of times the employer will say, I'll contribute up to whatever the minimum is, 3% or 2%
Hmm.
that's required by the IRS. Ooh, so good to know. Okay.
Right. So it's also tax deductible though.
Uh-huh, uh-huh,
And it's tax deferred also. So similar to the solo 401k, your taxes are going to grow. I mean, your contributions, sorry, are going to grow
uh-huh.
tax deferred. And then once you start to withdraw on that money, once you retire, then it's going to be taxed at your ordinary tax rate at that time. So that's something to keep in mind also. And
Mhm.
again, I will say, I'm gonna just throw this in here. It's okay if you have some taxable items and then some non-taxable items. It just depends on your situation. But that again, that's something personal and it has to work for your situation.
Gotcha. Okay. Now, what about a Roth IRA? Again, IRA stands for Individual Retirement Arrangement.
Oh, I wanna add one more thing about the SEP that I did not mention.
Please.
So, you have up until the tax deadline to contribute. So, you have up until April 15th. Now, if you have like a, if you have but make sure you have it set up by December 31st. Okay?
Got
So,
it.
go ahead and get it set up, but just, April 15th to contribute.
Mhm. That's
Um
huge because a lot of times people can do the paperwork, but they might not have that cash flow. So that's nice that you have that time.
Right, and then sometimes people decide how much they're gonna contribute based off of their liability, but, I don't like waiting on until April 15th. I want you to know
No,
before the end of the year
no.
what that looks like.
Yes.
So
And if depending on your tax structure, it could be March 15th. So yeah, let's go
yeah,
ahead and get it done.
exactly. Alright, so the Roth. So the Roth is very popular
It
across no matter
is.
if you are self-employed or if you are a W-2 worker, and that's
Mhm,
because the Roth funds are after tax.
mhm.
So all the funds that are contributed are after tax. So basically, you're not going to get a deduction up front. But what will happen is when you start drawing that money down, now you don't have to worry about whether or not you have to pay taxes on it. You're taking that money out tax free. Now, I should also mention that with the Roth, the contributions are always able to be withdrawn tax free, but you have to wait 5 years to withdraw the earnings tax free.
Mm,
So there's some
hmm,
flexibility there. I will never tell you to withdraw your money before retirement, but I
correct.
understand that situations occur.
Hmm.
And so you may have to, right? Um, it's not my favorite thing, but I tell people, like, at least create some type of flexibility for yourself. Now,
Sure.
you're only allowed to contribute $7,000 if you are under the age of 55. And if you're 55 or older, you can contribute up to $8,000 for the year for
Gotcha.
the Roth. And there are also income limits on the Roth. So if you are, and I'm gonna look at my notes because this number changes every year and I never keep up with it. So if you are, single or married filing single, then you're able to contribute if you are under 146,000 per year in income. If you are married filing jointly, is 230,000. So just keep that in mind. Some people are not able to contribute to the Roth, and they are back ways. We're not going to talk about that because those are advanced. But
Yes. Yes.
and I've heard
Yes.
there's some changes coming around to try to make that not to have to be the situation, but we don't see it yet. But for the
Gotcha.
Roth, you have until April 15th also to contribute for the previous year. So for 2025, you have until April 15th, 2026.
And see, I have a Roth. I like a after tax type
I
of
like
thing.
the
And I
after
was
tax.
able to get my Roth set up before I even had a business.
Yes.
So, so that's something too that, yes, we're talking about small business owners, but I think I got a Roth when I was like 30 and I'm 43 now. So it's just one of those things where I'm just very conservative. Just take my money out because I ain't going to pay it. So just go ahead and help me, Lord, help
I don't
me.
like
So, yes.
taxes, so let's do it after tax.
Yes, period. But I just hate that it's that limitation. So I
Yeah,
like that we're breaking down the dollars because we can see you get some benefits, but there's give and take sometimes with the thresholds and the dollar amounts and all that fun stuff.
exactly,
All
exactly.
right. What about a simple IRA?
So the simple
Is
I
it
always laugh
simple?
about the simple because I feel like, at least in my experience, most people are like, "I don't want that simple." But the simple works more like a typical 401k plan. It is a simple IRA, so individual retirement account, but it is for employers with less than 100 employees. So I would say, like, if you have, this is where kind of like the difference between that SEP and that simple come into play. If you have just a few employees, then that SEP might be better. But if you have a small business and maybe you have, like, 10 and up, and I'm not saying that's the number because you got to see what works
Mhm.
for you. But if you have a certain number of employees under 100, though, you may want to look at the simple. Now, the reason why the simple is more like a 401k is because the employer is required to either match up to 3% of contributions. So that's kind of like how most 401ks work. They have that match, or they can contribute 2% for all employees who have earned at least $5,000 for the year.
Okay.
Yeah.
Reasonable.
So they have to have this set up by October 1st, though. So with
Mm.
the airtime of this wouldn't be something that you would sign up for now. Like, it, because this is airing December 4th. So if you wanted it for 2025, this may not work out for you. But going forward, this may be an option for you to sign up if you have a certain number of employees and you want to offer them those benefits that they would typically get to make, employment at your company look a little more attractive.
Gotcha. So, Elaine, is this the only one out of the four that is due by October 1 to create?
It is.
But it's simple.
It's simple.
Okay.
It's simple, but it's, like, that's why I say it's more like, it's like a 401k, but for a small
It
business
is.
because, just on the back end, 401ks to administer for the companies are very expensive. It
Is.
Yeah, like, just the administrative costs, forget the amount that they have to contribute for their employees, but just
Mhm.
having it available is expensive, and even having choices between the investments. are pretty expensive. So if you have an employer who has a small amount of investments, and this is just a little, something to put in your pocket, just know that that small amount of investments is because that plan is extremely expensive. And this is
Mhm.
what the employer can afford and still be able to, pay well. And we know that we like profit. Let's be real. Everybody has to have profit. So
Period.
this is what works for them. When you have an employer with a large amount of investments, most of the time I've seen it because it's already like an investment company or
Right.
either, they've been around long enough where they have that type of cash flow to be able to provide to their employees those large amount of investments. So that's just something to keep in mind when it comes to having investments available for employees and employers.
No, this is good stuff. And that leads us right into our last account, which is the flexible spending account, because I think that's
Mhm.
another benefit that small business owners can provide. Because, yes, we want to save and we encourage that. But we know a lot of folks right now are like, if I had to pick between retirement and my health, let me pick my health. And I hate that we even have to choose,
Yeah.
but this for me selfishly, I have a 10-year-old, he's going to need braces, he's going to have things that come up. I'm like, "Ooh, let's talk about FSA's flexible spending account." So, Elena, can you define what it is, some of the common types and the tax ramifications for those?
Okay. So flexible spending accounts, first of all, I'm just going to say this is different from a health savings plan. So keep that in mind. Flexible spending accounts are spending accounts that you're able to contribute to pre-tax. So it reduces your taxable income, but when you have to use all the funds that you have going into that account by the end of the year. Now, what I would say is they say end of the year, so they say like December 31st, but most employers and most plans have a grace period. The grace period is different depending on the company. So just keep that in mind. I've seen where like you have until like March 15th. I've seen where
Mhm.
you had till March 31st. I've also seen where you had till February 28th. So you have to pay attention to that piece to make sure that you use that money because it's a use it or lose it. So just keep that in mind.
Mm.
Now, the reason why we love these, and when I say I love a flexible spending account, I
Yes.
love a health savings account even more, but a flexible spending account is very helpful because it reduces your taxable income, but you can also accommodate for your expenses that you know that are gonna come up. So we can
Mhm.
start with, like, the healthcare one. So there's 2 types for healthcare. There is a full healthcare flexible spending account, and then there is a limited. For the full, you're able to have money deducted from your payment. So for you business owners, if you're doing salary, you can have it automatically come from your salary.
Nice.
If you are a person who does you may be a LLC or sole proprietor, you don't have a payroll set up, you would have to work with the company to figure out how you can have that money deducted from your
Mhm.
account. They may do it, on a either monthly basis or every couple of weeks basis, but depends on the company. You're having those funds come out, and when you go to either like any of your medical appointments, so for the full service, it can be medical appointment co-pays, it could be to pay for some of your bills if you have a portion that you have to cover, it could be for
Mhm.
dental, it could be for vision. I'm trying to think, did I forget anything health-wise in that?
No, that sounds right. What
Okay.
about prescription medications,
Prescription medication, that's used to be my thing
eyeglasses?
because I
I'm
had
blind.
a sickly kid. Well, not sickly, but, asthma,
Yeah.
played sports, always hurt, that type of kid.
Right, right,
Uh,
right, right.
so prescriptions, all those things can be used with that flexible spending plan. You can even use it in some cases for therapy appointments.
Mm.
So that's something too. A lot of people don't realize that, but I started doing that research because I just wanted to see like, okay, what all can I use it for? Because you
Absolutely.
want to make sure that you're using it. My husband has it available at his plan. I'm like, we'll see what we can use this for. And so that's one of the items that I don't know if it was more, something that they have implemented more recently, but before I don't remember therapy being an option. So just know that, for some plans, you could use therapy co-pays for that. So that's something you can plan it out. I will also say with your I can't speak anymore. I will also say with your flexible spending account that they have a website, so you can use it for so many other things outside of medical. So if you come up on the end of the year and you're like, I need to use my funds, you can use it for like lotion. You can use it. People who like the Aura ring, I think that's on there.
Yes.
You could use it for your menstrual products. I know a lot of women who they set that up just for that because we know
Mm-hmm.
those things can be expensive. Um,
Mm-hmm.
of course, we mentioned medications, but things like massage pads and things you may need that affect your health, you can use it for
Mm-hmm.
that. Now,
Ooh.
with the limited version, the reason why it's limited is because you have a health savings plan also. So if you have a health savings account on your medical plan, then you are limited. You need the limited flexible spending account. The limited only covers dental and vision. So if you think about like copays for that or like glasses, I'm good for using it for glasses. I know y'all probably don't realize I wear glasses.
Yes. Oh, we understand eyeglasses and contacts. And I'm
Yes.
glad that you brought up there's a difference between just a flexible spending account and a healthcare spending account, HSA. And I
Mhm.
was like, oh, it's kind of the same, but you're right. It is different. So I'm glad that you pointed that out.
Yeah, because the HSA, you're able to keep that for years. Like you could leave that employer and you may not be able to contribute anymore, but you could still hold those funds until you're ready. So that's one of the good things about that one. As a business owner, though, with an HSA, like because HSAs have like you put the money in tax free, it grows tax free. And when you take it out, it's tax free.
Huh?
Yeah, HSAs are like
We need an episode on
Imma pull one of my
HSAs.
mom's terms because she said it to me this morning, so it's in my head, are the bee's knees, right? So so a
Yes.
lot of people, especially if you ever heard of the FIRE community, that's the Financial Independence Retirement Early, they love HSAs because you can put so much money in them and you can use that for medical later on. So
Oh, and
that's
the
why there's
older we
something you
get,
really need to use.
Elena, I'm like, yes,
Mhm.
because I know I just shelled out over $2,000 for a follow-up on a mammogram, and I was like, "What? What the
Yes.
what?"
Mhm.
Gotcha. I'm
Take care.
adding that to it. So, like I said, we got to have an episode now on health savings
Yeah,
accounts
we
because
definitely have
that's a
to.
whole okay,
Yeah,
so we
that's
talked
a whole
about
'nother thing.
full FSAs, limited FSAs. What else are there? Is there anything else that we
The
should cover?
dependent care FSA, which is my favorite.
Yes. Yes,
It's my
favorite.
favorite because 'cause I'm parent,
Mhm, mhm.
parent who had to pay for daycare. I was not blessed to have
Yes.
retired parents. So
Same, same.
so with the dependent care FSA, you're basically you go ahead and you determine how much money you're gonna pay for dependent care for the year. Try to be under because again, that's one of those things again that it has to be done by the end of the year, but you do have a grace period. So just keep that in mind. Now, once you determine the amount, include summer camp because summer camp applies because summer camps can be very
Ooh.
expensive.
Oh, yes.
You can set it up where that amount is deducted from either like if you're running payroll, is deducted from the payroll pre-tax. So it's lowering your taxable income. And then as what happened is as you're paying your daycare or your dependent care after school summer camp, you just go ahead and submit your receipts and you get that money back. Now,
Mm.
if you're good like me, I was recycling the same money on a monthly
Mhm,
basis. So
mhm.
it's not affecting your budget as much because granted it's pulling out, but I would just recycle the same money. They give it
That
back,
cash
I'm paying
flow,
it back to the people. I'm submitting my receipts and getting my money back again.
period, because that's the whole point, especially when you get to the end of the year and you have to use it or
Mhm.
lose it. Now, is there a contribution limit to this? Because I will be putting all kind of money up in this plan.
So the contribution limit is 5,000 per household per year.
Okay.
Yeah. Or
Okay.
if you're married filing separately is 2,500. Married filing separately is a rough,
I was gonna say, why
rough.
why is that even an option? Why do people do that? You should just be head of household or
You know what it
single
is?
or married.
As a person who recently became married filing separately,
Oh,
not happy about it. But so I do understand in some cases. I would say if your spouse has a business and maybe they're not as up to par with keeping on track of their numbers, they always owe a lot, like things like that, then you may want to file married filing separately. I will also say the reason why we became married filing separately, because I am not a fan, but it is what it is.
right. I'm like, girl, tell me the tea.
Yeah. So if you are a part of, like, if your spouse, so in my case, my spouse works in public service. And so they qualify for the public student loan forgiveness program
Girl, I would
for
do it
student
too. I
loans.
would do it too.
Yes. And
Yes.
so he can get his loans forgiven. But what happens, you have to do the income based program to do that.
Yes.
If you're doing married filing jointly, they are pulling in both of your incomes to
Yes,
determine how much
Lord,
you pay.
yes.
So it's better to do separately so that it's just looking at his income to determine how much he has to pay for 10 years. And they do it, they check
Yes.
every year, but it's better for just him, not both of us, because both of us
Yep.
is a problem.
Yes, I'm in that boat. I'm
Yes,
married to a teacher.
yes.
Absolutely. Yeah, I
So
totally understand that. Oh, that's a good point.
yeah. So just something to consider. A lot of people don't think about that, but overall, um, it benefits us. It just I don't feel it at tax time, especially as a business owner. So
I know. It's tough. It's tough. So yeah, so Elena, anything else? Did we cover everything? Is
there's
there
one
any final
more.
thoughts?
There's
Oh,
one
please.
more. Now, this may be I'm thinking this applies in most larger cities. It may apply in some smaller cities because I don't typically see it, but I've noticed if the city has like a large public transportation program, you would
Mhm.
typically see employers offering the commuter benefit program. And it's also
Ooh.
a flexible spending account. And in the same way, you can contribute tax free to a commuter
Mm.
benefit program. And then and this works really well if you have to take any type of like public transportation into your office. So if you're a business owner, you can have this available, especially if you have employees,
Mhm.
so that they can contribute. So I'll just explain it from my perspective. When I worked in the city, I would have to buy a monthly Metro card, basically. It was like
Mhm. Yep.
100 and something dollars. The prices have gone up, so I'm not gonna quote the numbers.
Right,
But it was
right.
100 and something dollars a month. My employer would take that money out of my account at the time. And so as an employee, you would pull it out of the person's account on their paycheck, and it'll come out pre-tax. So, lowering their taxable income, and then as they are paying for their services, a lot of times they'll give you like a card or account, and you can use it to pay for your commuter benefits. And then they would, of course, give you the money back. So it just makes it a lot easier to do it that way. It is really helpful if you spend a lot in commuter benefits because that even like sometimes it works for parking
Mhm.
because that's one thing to consider even like when I think about we reference y'all know where Veronica lives. So when I reference Charlotte, it's a big deal when you were in Charlotte if you worked in downtown Charlotte.
Oh,
Like,
yes.
okay, how much does it cost to park? Is the parking free?
Exactly.
Because that
Right.
reduces your income if you have to pay for that and you don't have that commuter benefit to help offset it. So
Mhm.
as an employer, if you're in a larger city and your employees commute in, or they have tolls or something like that, you can offer that commuter benefit to make it a little bit easier and make your benefit package look really nice. And as an
Yes.
employer, it helps you too. So,
Yeah. That's what I like about the flexible spending plans. It's like even if you might not have health benefits or some of the retirements, it does give you that flexibility for transportation, for elderly. It's part of that dependent care too, as well as
Mhm.
children. So that's awesome. Thank you for adding that. And especially, I am thinking about, unfortunately, with this government shutdown, I think about a lot of people, especially in that area, who are commuting or having to go back to work in person. That's a nice benefit that you can add to folks like, hey, I know you got to come in the office, but I'm providing this flexible spending account.
Right.
Wonderful. Well, Elena, this was a lot of information,
It
but a
was.
lot of good information, and you always explain it so well. But Elena, I would love for you to tell those watching how can they reach out to you. This will air the beginning of December. I don't know if you're taking any more clients because I keep sending Elena people every day. But if you are taking clients, tell us a little bit about your business, how they can reach out to you, all that fun stuff.
All right. So I am Alanna Anthony. I am a tax strategist and CPA at Amplify Accounting and Consulting. You can reach out to me either on my website at amplifyac.com or feel free to send me an email. It's hello@amplifyac.com. And we could just jump on a quick call. My consultations are about 30 minutes and they are free just to understand your situation. If you either need help with taxes or tax planning is my jam because why do we want to give all our money to the government when we can use it
Period.
for other things?
Right.
So reach out to me. I'm always available. And I will say, well, I said I'm always available, but I am going to take some downtime in December. I think it's well
Yes.
deserved. So,
Absolutely. I've been telling folks that if you're looking for a tax accountant or just a managerial accountant like myself, this is the time to get us because after like December 15th, we're getting ready for that calm before the storm because it's going to be on and popping really January because there's January 31st deadlines and then it just is nonstop, I feel like, until April the 15th. And that's for me. And I don't even do taxes. So I can imagine for you, Elena.
oh yeah, it gets really crazy. Like it just I'm trying to prepare now. I literally was talking to someone yesterday, like, okay, let me tell you what I need you to do. Like I'm trying to hire someone on.
Yes.
That's just
Yes.
crazy.
Just for like the easy things. But
Yes.
totally understand. Well, thank you for making time for us as
You're
always.
welcome.
And thank you to the V team, the listeners, for listening to the Veronica Edwards Show. Don't forget to subscribe to our YouTube page and Buzzsprout so you never miss an episode. And until next time, stay balanced and financially savvy.